Hello and welcome to this market and economic update. In this video, we explore the most important themes from the first half of 2026 and what helped drive strong market performance. There is a saying that smooth seas do not make skillful sailors. The first 6 months of this year certainly put that idea to the test. Investors faced a war in Iran, rising oil prices pushing up inflation, and ongoing questions about artificial intelligence. And yet, markets reached new all-time highs. Company profits grew at a double-digit pace, and many types of investments delivered strong results. Over the next few minutes, we will walk through several key themes that could continue to shape markets in the second half of 2026. Let us begin by looking at where we currently stand in the business cycle. The business cycle refers to the natural pattern of economic growth and occasional slowdowns over time. The current period of growth started back in April 2020 during the depths of the pandemic. That means we are now in the seventh year of this cycle, which may come as a surprise given how many times a recession seemed just around the corner. As this chart shows, some business cycles have lasted 10 years or more, including the recovery following the 2008 financial crisis and the economic expansion of the 1990s. The fact that this growth is still continuing today reflects the underlying strength of the economy. Right now, the overall picture looks broadly encouraging. Inflation is elevated, but may be approaching its peak. The job market has strengthened again after slowing last year. Business investment has picked up, and consumers are still spending, even if they feel cautious about the outlook. Historically, conditions like these have tended to support financial markets over the long run. This chart shows how a broad range of investments have contributed to positive returns in portfolios so far this year. The second quarter was especially strong across many asset types, partly because markets began recovering at the start of April after the initial shock of the conflict in Iran. Company earnings have also been a major driver of performance. Profits for companies in the S&P 500, which tracks 500 large U.S. companies, rose more than 20% over the past 12 months. Another notable development this year has been a wave of high-profile initial public offerings. An initial public offering, or IPO, is when a private company sells shares to the public for the first time. SpaceX completed its IPO this year, and listings from OpenAI and Anthropic are anticipated. While these events attract a lot of attention in the short term, what truly matters is how these businesses perform over many years. That is typically where the real value for investors tends to emerge. It's also worth noting that U.S. stock prices are on the higher side. The S&P 500 is currently trading at around 20 times earnings, which is above the long-term average of 16 times. Earnings refers to company profits, and this ratio helps indicate whether stocks appear expensive or reasonably priced. While this does not tell us what markets will do in the near term, it is a useful reminder to stay well diversified across different types of investments. Turning now to inflation, the conflict in Iran disrupted the flow of oil through the Strait of Hormuz, pushing the price of Brent crude oil to nearly $120 per barrel earlier this year. Overall inflation, as measured by the Consumer Price Index, climbed to 4.2% in May as a result. The Consumer Price Index tracks the prices of everyday goods and services. However, core inflation, which removes the more volatile categories of food and energy from the calculation, remained at 2.9%. This suggests that price pressures in the broader economy have been somewhat more contained. The encouraging news is that oil prices have since fallen back to around $70 per barrel, and many economists are cautiously optimistic that inflation may be near its peak. The kind of pattern has been seen before. After Russia invaded Ukraine in 2022, oil prices spiked and inflation rose. Once conditions stabilized, prices and inflation rates generally came back down over time. Next, let us talk about market volatility, which simply refers to how much investment prices move up and down over a period of time. How investors choose to respond to volatility often matters more than the volatility itself. The VIX is a widely used measure of expected stock market volatility. Right now, the VIX is below its long-term average, as this chart shows. Past periods of higher volatility have also created opportunities for investors who stayed the course. The biggest drop in the S&P 500 so far in 2026 was about 9%. Declines like that are never comfortable to experience, but markets have not only recovered from that drop, but have gone on to reach 24 new all-time highs this year. The investors who tend to benefit most are those who resist the urge to sell during the most difficult moments. Finally, one consequence of market uncertainty in recent years is the record amount of cash sitting on the sidelines, meaning money that is held in savings rather than invested. Assets in money market funds, which are low risk accounts that hold short term investments, have now reached $7.9 trillion. That is more than double the level seen before the pandemic. While holding cash can feel like the safe choice, it comes with real costs. With overall inflation running above 4%, the purchasing power of cash is actually declining over time. In other words, the same amount of cash buys less than it did a year ago. Even when short-term interest rates look attractive on the surface, they often do not keep pace with inflation over longer periods. This is why maintaining a balanced portfolio, one that can benefit from growth, generate income, and help preserve the value of your savings, remains so important, especially as the economic cycle continues to mature. We hope you found these insights helpful. If you would like to learn more about any of these topics, please don't hesitate to reach out. We look forward to speaking with you.